Join us now for a look at technicals is Frank Cappelleri, founder and president of CappThesis and a CNBC Pro contributor. It's good to have you on, Frank. And whenever you're looking at any of these things, and I'm not going to ask you for fundamentals, but I'd still like to figure out why gold and Bitcoin are both getting such a firm bid. And this is, Bitcoin, we watch that, we don't know what it's going to do. But gold for a long time made a saucer sort of a base. And this is a really significant move in gold. Maybe it has to do with geopolitical tension, but usually it's about, is it about money printing? Is it an inflation hedge? Because if inflation is coming down, why is gold going up? Because we're going to start printing again, I guess.
Right. Joe, thanks so much for having me. Well, considering Bitcoin, a lot of people call this a bubble. I take issue with it because what happens when a bubble bursts? It doesn't come back. And as you've seen through Bitcoin's history so far over 10 years, of course, it has some really big spikes and a lot of devastating losses. At the same time, it has proven its comeback. Not only that, when it comes back to a new high, it's proven that it can go past that high by a substantial margin. And again, it's not too old in terms of the asset classes, but we can only go by the trend. And even before you get to that point, technicians love Bitcoin because it pays attention to the technicals. And there is a breakout that we pointed out a number of months ago, which had a 100% move, which a lot of people said, how can it possibly get that far? Well, here we are. And you can make the case that there's news related, so forth and so on. I think it's very important to realize that it's an asset class that people want to get involved with. And a lot of times it moves with the S&P 500. And actually, if you put Bitcoin and S&P 500 on the same chart, you see that they move together more often than not. It's very rare that one moves in one direction and one the other, which brings us to right now. It's very important to see if the both can continue, obviously, to move with one another.
Trying to figure out what you said about gold there, because the question that I asked you was entirely about gold. Did you mention, so what about gold? That was what you came to talk about, was Bitcoin, or what about gold? Why is gold so firm?
Well, gold, I look at this over the last 4 years. It's been trying to move higher, of course, and failing. And right now, I look at that as one big high-level consolidation pattern that's been taking place near the all-time high of 2011. And I think when you're in an environment like this where people are going after breakouts, no matter what it is, gold, Bitcoin, S&P 500, breakouts like this are going to work where they haven't in the past. So with gold, if you get a pattern there, I have an upside target near 3,000 at this point, and that can continue to work out as long as we continue to hold that breakout point right around 2,100 or so.
How the S&P? I was trying to figure out what you feel about that 6,100 if it gets through a certain level, or what, that's 8% above the midpoint. What was your analysis based on?
Sure, 6,100 level was based on the breakout through 4,800, which was really just a very big bullish pattern. Now, I don't take that lightly. It's still 17% away. The good thing right now is that the market hasn't pulled back much yet, of course, and so it has the ability to pull back, say 7 or 8%, and still keep that breakout target intact. Now, really, this is about smaller patterns working first to actually get to this point. And so, starting with the October 2023 low, S&P now has built and broken out from 5 different smaller bullish patterns, having their upside targets hit each time. Most recent one being 5180. And I get asked a lot, how does a bullish pattern actually work? Well, it goes through a number of steps. Number one, it has to stop going down, of course, upside a follow through, then form a higher low, and that constructs a bullish pattern. Then you need to see a clean breakout, meaning that the breakout zone can't be violated and eventually hits that target. So again, S&P has done that 5 consecutive times. And so it sounds easy right now, but we know that there's environments when that doesn't work. And it's pointing to the previous 3 months right before this, where there are potential bullish patterns forming, and we just couldn't get to that point where we had necessary moves to get the breakout, so forth and so on. So it tells us that, of course, investors want to continue to buy the dip, even though that dip has only been about 2.5% the entire time so far.
What about yields and the yield curve? What is that indicating?
Well, the 10-year yield, I think, is an interesting one to watch, of course, just because it's moving higher but gradually. And one way I look at this is on a weekly basis, just putting a momentum indicator on it as well, including the 14-week RSI. And so what's important about that is on the way up when yields are really flying 2021 to 2022, that RSI routinely got overbought and extremely so as well, which is indication how strong the market is. Now, right now, yield has been moving higher, but in a very subdued way. So that indicator really hasn't gone much above the midpoint, just shows momentum isn't really there just now. And I think it's important because, of course, that's going to give us an indication when traders think about inflation and also with the Fed looking for the market 10-year yield in this respect for guidance as well.